Welcome to everyone who's just joining us for the NC Leap workshop today, Getting Started for Entrepreneurs. I can see that people are still trickling in, and so we're going to give everybody just another minute or so, and then we'll get started. Thanks for being here today. We look forward to a great workshop. Okay, let's go ahead and get started. I want to welcome everybody to our workshop today, Getting Started for Entrepreneurs. My name is Paul Vaughn, and I am a staff member with the North Carolina Bar Foundation. And today we have Crystal Robinson, who is going to be presenting to us about getting started. And I just want to take just a second and thank our partner organizations for helping get the word out about these workshops and webinars that we've been doing. Mountain BizWorks in Asheville for doing all the hard work that they do with this type of educational materials, and also Prospera in Charlotte and the Small Business Center Network around North Carolina. So thank you to our partners for helping us get the word out. And on that note, I will be turning things over to Crystal here just a second. If you have questions, we are going to ask that you use the Q&A function on your Zoom screen. Crystal may want to talk a little more about that. We may be saving those till the end, but you can use the Q&A function that's on your Zoom screen. So without further ado, Crystal, take it away, and thank you so much for being here. We know this is going to be great.
Good afternoon, everyone. We are going to talk about getting started in a company to become an entrepreneur. I started, where is it going? There. I started at my first business when I was 19 years old, and I have helped many businesses to start or expand, even from with Fred DeLuca with Subway. He had a micro lending program that we would teach entrepreneurs how to start a business, and also under my 12 years of experience as an attorney, helping people start. So I've seen it as an entrepreneur. I've had to pay for, how are you going to make payroll? What should you do? And then I've also done it as an attorney, helping businesses after they've made those decisions or before they made those decisions. So first, you need to figure out what type of business you want to start. I always recommend something that you're actually passionate about and that you have some experience, because, I've seen people that engineers that want to open up salons. Well, if you don't know the backstory of a salon, it's sort of hard. Now, if you were a hostess, waitstaff, bartender, and you wanted to open up a restaurant or a bar, you've seen the backstory of it and you have some experience. Startup cost is a big one, because you could start a salon or a real estate company for a lot less than you would if you're like, oh, I would like to be the next Tesla. There's going to be some startup costs that you're probably not going to be able to do unless you have a diamond mine behind you. And then also the growth of getting it up and running and profitable. What are the personal challenges in owning a business? Some people think that they will be working less, and that's not what usually happens. You need to learn how to manage your time, hopefully getting a work-life balance, and that you know when you need to pivot and change. There's a lot of restaurants that have changed during this last year, and there's a lot of other businesses also that had to change. Law firms are one of them, is that they had to, people that wanted that paper and that face-to-face has had to learn how to do more of the paperless. And that's one thing, like in the last year, I was already paperless, I was already virtual, I was already in many different states. I didn't have to pivot as much as some other people. And each industry is going to be different, similar to vets. They've had to change, you don't just go in, they pick up their animal outside, and you might have to change the strategy that you've already had to keep that work-life balance as well. Then you also have funding problems, that if you need sufficient capital and cash flow to keep it going. And then one of the hardest things is finding great employees and then realizing when you need to let them go. Some of the biggest mistakes of startup, I've put them in 3 different categories, and we're going to talk about them in 3 different categories. The legal is, you need to make sure that you have those contract matters in place, and also hiring the wrong employees. Some people, you have that connection with them and you hire them, and then you realize that they've had a criminal history that could harm your company, or that they have been fired many times for actions. And then sales and marketing. There are many things that go into sales and marketing that people don't realize, that it's not just the going out and saying, I would like you to buy my widget. So one is that they think that they have this, perfect concept, either a good or service, and that they're just going to be successful. And most companies are not successful right off the bat, and that you have to figure out what you can do if your projections are not met in sales. And then there's other things that are quality of your product and service, how you provide that service, or how you acquired that product. There could be defects in manufacturing that could set you back. And then also, sometimes they have a great product or a great service, and they don't realize that they need to actually market and have salespeople. And you have sales in service as well. A plumber has to sell, an attorney has to sell, a restaurant has to sell all of their service to other people, just like in the marketing is getting people there so that you can sell them. So a lot of times people will not realize the supply and demand on the pricing of the product, that you can overprice or underprice your service or product and not be able to provide the quality that you need to do. And then I've seen many business plans that they're like, oh, we have no competition. We're completely different than everybody else. And it's like, no, you have competition of something. And they're going to be able to say, okay, if I don't use this product or this service, I can use a different type instead. And so we have some sort of competition on anything. And then also the not pivoting or adapting as quickly as necessary. Then financing, when people do projections, a lot of times they don't project long enough to say, okay, what happens if we don't make a profit instead of 6 months, we don't make a profit for 9 months? Do we have enough capital for that? And also budgeting for, you can budget to effectively to not be able to realize that there are things that have variable costs involved. And so if you're budgeting to the point where you're like, oh, the warehouse is going to always have this amount of utility cost and utilities jump, then your capital can be lower because of your utility cost. What are the concerns? Under the legal, how to protect your assets. And what you do with that is that you make sure that your contracts, your terms, your human resource handbooks, even down to your intellectual property, all are looked at in the legal mindset of how to protect yourself and how to protect your company. Then you also have where sales and marketing is how to make your money. If you don't have a adequate return policy and you have to fall back on whatever the state or industry is, then you might have costs that you did not realize. And let's say the global internet regulations, if there are things that you can be fined for if your product or service is marketed throughout the world, that you need to make sure that you cover that. If you're a plumber that's only giving service to the local area, that's different than if you were selling a product that you can, put in the mail anywhere around the world. And that's also with sales taxes, because, if you get into anything in California, they have a different view of how they are to get sales tax than if you're selling to Texas. If you're selling inside your state, you know that you have a headquarters in that state, you're selling in that state. If you're selling a product or if you're selling a service that is being taxed on sales, then you're going to be paying that. But there are other states that have sales tax laws that can attach certain things, such as if you get your product from California, in certain products, not saying every product, that's why you need to have an attorney that can help you with that, and a CPA that can help you with that. If you manufacture it and then sell it out of there, you might have to abide by California laws for certain things. And then financing. I've seen where many people will be so excited that a bank has provided them financing that they forget to read all the loan agreements and realize that even though that the thing is, the loan is for the company that they have personally guaranteed, and that they have also collateralized all of their items that are loans under that. So if you have your car loan, your personal car loan, and your kid's car loan at that same bank, and you get behind on your business loan and you sign over saying that everything is connected to one, even your personal bank account and your business bank account, that loan agreement can make it that the bank can acquire collateral that's not attached to it. And that also includes with financing statements. Some banks do them, some banks don't, where they provide you with the UCC filing with the state. And that can, how those things are worded can make it anything that's in your business, or it could be just the refrigerator that you bought for that, with that financing statement that's attached to that loan. And so there's also other things that with ownership agreements that, you know, if there's a step up of how much money all the owners are supposed to provide, what happens if they don't provide that next collateral? How do I protect my personal finances by setting up the right entity? And this is an overview of the different types of entities, and that each company, based on the industry, based on the liability that you will be attached to for that industry, can change what these can be. So now I will state that, you know, sole proprietorship, be aware of starting that business as that, because everything is at risk. There is nothing that is that is a wall between you and your business. So, you know, if you're beginning to start a business, the state entity filing and the process to have at least a you know, documentation saying that you're thinking about making sure that you are running this business as separate from your own is very simple and able to be done, you know, very quickly, but it's very important and to do it right. So, you know, some people say, oh, I'm supposed to go and incorporate in Delaware. Well, not all industries benefit from that. Now, if you're a tech business and you're wanting to, you know, build the best app for whatever is going on, and you're going to resell that in a, you know, you want to make it public someday, and you have, you know, wanting to sell it, you know, after an IPO and that kind of stuff. Yes, the Delaware is because people in the tech industry, for all those investors, are going to look at that. But if you are wanting to, you know, have a headquarters, manufacturing, sales, it's usually best to look at your state, or if you're going to have a manufacturing process someplace else in another state, you need to look at the taxes on and which one would be better. And you also need to look at, if you're going to expand, what are the costs of opening up a foreign business filing versus a local, you know, domestic for that state. So like some states will triple the price for a foreign one, meaning that you have a headquarters in one state and you're wanting to open up a business in another state, and it can be your manufacturing, it can be a sales place. You know, you're making hamburgers and you're wanting to go from North Carolina and open up in Texas. That can be more expensive as a foreign filing than if you're like, oh, most of my business is going to be in this other state. So I need to file in that state instead. Some states require state identification numbers, some do not. And then once you file with the state, you also need to file with the federal, even at least your employee identification number. And then you have, if you are a corporation or an LLC, you need to sit down with your attorney or your CPA and figure out which one of sole proprietor, corporation, and if it's corporation, S corporation or C corporation. S corporation are small businesses under 75 shareholders, and it just flows through to the owner. C Corp is like, you know, your GMs, your Teslas, all of that, plus all the ones that want to put it on the stock market. They're looking at C Corps. Now, the mere process of just filing with the state is not the thing that protects the business owner. You need the back office stuff as like the operating agreement or the bylaws and your minutes. So what is the simple way of showing creditors that you are separate? So if you are an LLC or a corporation, you need to sign as not yourself. Now your name is going to be there. So it's going to be the corporation name by Crystal Robinson, and then printed Crystal Robinson and, you know, president or manager or whatever your title is within that corporation or LLC. And that these things need to be on every contract, every loan agreement, even your cell phones, your lease, so that that lender or that vendor knows that you're signing for the corporation and not yourself. This is steps for piercing the corporate veil. And basic actions to not pierce the corporate veil. Follow all your corporate formalities. Make sure that you have the bylaws or the operating agreement and you look at them. And then, you know, if you have stocks, you have recording minutes, and keeping that information and keeping your corporate funds separate and your taxes separate. You know, if you pay your taxes, your federal taxes and your sales taxes with your personal funds, instead of saying, okay, my corporation does not have the funds for this because I took out too much and just distribution and didn't realize this, I need to invest back into my company. I need to do the documentation to show that, and your CPA can do that. And that everything needs to be a complete separate funds from your personal. That's also included having a bank account that is for your company. Even if you are a sole proprietor, you need to have a separate bank account to make sure that you can do your Schedule C at the end of the year in a much easier fashion. So what agreements between the founders? So if you have two people or more coming together with an idea, then that is basically a marriage. And so all these things are like a prenuptial agreement that you know that someday you might split up and your relationship with the other founders can go south. And so you need to make sure that you have documentation in place on, you know, just because you both put different amounts in, one works at the business, one just puts money in, what's the equity split if y'all, go your different ways. Roles and responsibilities. Some roles are you make the everyday, decisions, and another founder can make the big decisions, or however that relationship is. And even with divorces, first refusals, probate, those all need to go involved into the agreements so that you know that if one had to file bankruptcy, what happens to the business in that bankruptcy? What if one's filing a divorce, what's your relationship with each other outside of that divorce? That could be that, hey, if any of these actions happen, I can sell back my portion and get a lump sum, so the business isn't involved. The money that I get is involved in that separate action. And then also, as of easy as removal of the person that's making every decision, and what happens if you sell the business. Which permits, licenses do you need? Well, one is the permits needed for your type of business. So if you are a bar, there's a lot of different permits that you will need just based on alcohol. If you're selling a widget, a product, you're going to have sales tax, and then even certain places will have home-based permits that you need to make sure that if you're going to be working out of your home, that your neighbors are not going to turn against you. And then you have from zoning permits that if you're wanting to put in a manufacturing place where you're going to be able to do that. And if you're back in the restaurant business, health department permits. What type of insurance? This is also based on what you're doing. If you never get into your car, commercial auto insurance might not be needed. If you are doing a pizza delivery place, possibly you might need to do that. If you have any type of employees, you need workers' compensation. And if you have a lease, you need your property insurance for the type of liability that you have. So if you're, and that's in your leasing. So you might have to pay for the actual insurance for the building if that's in part of your leasing. Or you might just be able to practically do like renter's insurance, that you're making sure that if anyone gets hurt on your property is the general liability type insurance. So there are many different things, and if you're wanting to recruit employees, you have health insurance, and many people thought that they had business interruption insurance, which they did, but no one thought about 2020. And so there's a lot of lawsuits going on about what the words are in regards to businesses having to close down because of COVID. We also have some key contracts that you need to look at, is that if you have a sales or service agreement, what is your requirements to provide to your customer or client, and what are their requirements of paying you, and other steps that they have to do. And then even down to offer letters to employees, what you need to say in those. If you have any independent contractors, a consulting agreement or a contract helps you if you're sued under wage employment laws, because the person says that they are an employee at the end of the year and you thought they were an independent contractor. that also makes it so that you know that what you can do with them too. You can't say that they have to be there at 8 in the morning if their job as an independent contractor is to do this one action. How whenever they do it is something that is up to them in most states. But if you have a consulting agreement or a independent contractors agreement, then you can show that you went to them and they came back to you and y'all agreed that they were independent contractors versus employees. And then if your employees or independent contractors are going to know your trade secrets or any of that, you also give them client list that they have an agreement that they understand that they're not supposed to be using that afterwards, and non-disclosure agreements. And those are very state and industry specific. And so if you do that, you need to make sure that you go out and get legal representation in regards to that. What do you need to do before you hire anyone? And this is a long list and of what you need to do, but realize that if you hire someone, it's a lot easier during that time to before you give them an offer, before you give them a start date, to verify. And I mean, I've even done where I go and do just a Google search, you know, I mean, you're going to do all the other stuff that's on here. But I found one time that the resume looked awesome for this paralegal. But the one thing is that she kept moving law firms. Well, lawyers are not the nicest people to work with. And some of the people that she worked with in town were also not the nicest people either. So at first I was like, well, you know, maybe she just knows her boundaries and doesn't want to be taken advantage of by attorneys. So she leaves this situation. Well, I did a quick Google search and found out that she had, you know, wanted for criminal actions in another state. She did embezzlement. She, you know, there was a long list of stuff, even like welfare fraud. And so I'm so happy that I took that time to investigate her versus like, oh my gosh, she is just awesome. And everyone in the office, I mean, she was able to sell herself. And then I came up and I was like, this is actually stuff that's found in the court system. It's not like someone just writing it up on, you know, on a website or something. And we decided not to hire her. So take the due diligence to make sure that you do that before letting them into your business, because hopefully you would do that if you were getting married to someone or, you know, having someone in as a nanny. You would verify that they would be able to fulfill legally their job. Now, if you do hire someone, you need to, a letter of employment is a really good idea of getting them to know exactly what you do. And then also it sets the stage for your relationship, that they know that you're not a person that changes it on a whim. And that if you state, hey, this is your start date, this is your salary, you're at will, or hey, we're going to have a contract that we need to, you know, agree to. And then also referencing the employee handbook. And a lot of people, especially if you are, you know, having your first employee, if they can feel that this person actually has thought about hiring someone, and it doesn't have to be a big handbook, but what's the process of doing things? What happens if it's a snow day? Well, look at the current, the local school district. Then if there is certain things that you need for your industry, there's other agreements that you might be needing to do based on what people are expecting as an employee. Sales and marketing. How can you acquire a great name for your business? You need to, when you name your business, you're naming practically a baby. That's like, this is your baby that you're growing, you're building up, and hopefully, it can live after you. So you need to make sure that it's easy to spell, that it doesn't limit you to just a small, it's like, oh, it's, I only do hamburgers, but I wanted to put some hot dogs on the menu too. And then there's also the things that you need to do is the internet searches, conduct a .com name. If you can't get it in a .com, is it going to be okay in your industry to be another dot whatever? So and there has BIZ, LAW. They're adding a lot more, and people just click. But the .com is the one that still is what people think of, especially if you're going to try to portray yourself as, I'm a traditional company. It's similar to LLC and corporation. If you're a traditional company, a corporation.com is something that you might need, versus if you're saying, hey, I am a tech company or a up and coming new type of industry. Also, we're getting a lot of issues with trademarks, and that you can look at your trademark name, and you can hire an attorney also to help you make sure that because there's a lot of different rules on trademarks, that you're not going to build up your business and then some company will come in and say, no, I've already done that. And I mean, it can be even from candles that people are making and saying, oh my gosh, I got this new name, and they never go out and look in internet search trademarks, any of that, and they get the cease and desist letter. And then you're like, well, I've already, I'm at least out there enough that this bigger company found me, and I have a clientele. Now I have to change my name. And it can be from, like, we've had Texas Tea, was just a local restaurant that just sold tea. So it was a local coffee, tea place. And they started wanting to get into a selling within the supermarket. Well, then they realized that that was already trademarked for tea, and they had to pay licensing to that company that got into the trademark office first. And then, I would test market your names, because sometimes you think it's great and your partners, your employees, your friends, especially a logo, make sure that you're put it up there and go, what do you think about this? Because some people might see stuff that you have never saw. And I've seen where logos can mean different things to different people, and you have to realize what that could be. How to build a great website. That make sure that you look at your competitors, make a list of things that you want on it, and be careful with using other people's art. Some people were like, oh, I'll just use this. Well, someone made that, and that you might need to make it unless there is a place that you bought it that was a stock place. They have stock pictures all over the place. And there's enough pictures that most of the time people don't use the same stock pictures. Then also, like the bottom down, no one really reads them unless something goes wrong. Terms of use, privacy, European GDPR, PR rules. Those are actually very important to have on your website, so that that you have a way that people know what they're supposed to do if they have a problem on your website. And then you need to register your name. I've seen a lot of times where a person will, and this has happened since the mid-90s, and people didn't realize what they were doing, is that they hire a web designer to build it. They get the name, it's under their name. The stuff that's on the web, they say they own it. The contract is not done very well or whatever, and then you realize you have to start all over. And so when you get that, make sure that the domain name is under your company name, and that if you're a web designer, is putting information on your company website versus the designer allowing you to use their web design for your company. And then the newest one is ADA compliant. And there are some things that you can put little writers on your website that can help individuals to use it that might have, if they are have some disability that could hinder their sight, their listening, that kind of stuff. So that is something that is actually the new thing that people are trying to get to, because you can really get fined, and it's not really fined. You get sued by people that look for a non-ADA compliant websites and get, and that's some big money. And trying to fix it is just a couple $100 with an ADA compliant attachment to your website. And how do you market in today's world? We all know about SEO, making sure that you can get into some guest articles. If you have some sort of significant event, news places are still looking for information to write on. So even doing the old-timey press releases can help. What terms are in business contracts? The basic idea is offer, acceptance, and consideration. So that's, those all mean different things for what type of industry you're in. That it needs to make sure that you know who the parties are that took the offer, that agreed to the offer, and then what are the considerations? Are there payment terms? Are there actions that you have to do? There has to be something exchanged to be a contract, and that you need to make sure that you know both parties who is expected to do certain things. How can I protect my business ideas? There are many different ways depending on what those ideas are. If you invented something, and you can invent a attachment on a new way of doing something, you can patent that, and then you'll need a patent attorney that, or at least a patent artist that would be able to take your invention in that industry. And so it's not just like, oh, I know one patent attorney. Each patent attorney does certain things in different industries or in different types. So one is like, oh, I only do mechanical stuff. And another one's like, I do, structural things. Copyrights and trademarks. The copyrights are anything that you write. Even your websites can be copyrighted. There's certain things that you would want to register, and that would be like your books and stuff that you could sell into the world. You certainly don't want, you want someone to have a registration to say, I did this. Trademarks, there are state trademarks for people that are just wanting to stay in the states, whatever they're at. And then there's the federal one that goes the whole United States. And then now we're getting over into the EU, China, with trademarks that you can, if you're wanting to start selling, across the world. I mean, Israel has a trademark, and a trademark office, and Bosch, Cat, the Caterpillar place, they've all trademarked their stuff with those other countries as well. And a service mark is the same as a trademark, based on what you do with it. It's just that trademark is for like the items, and if it's a service that you're identifying with, and most companies now are services. So, and then there's also internal ones that you don't want your trade secrets to get out. And there are things that you can do to prevent that inside of your organization. With financing, a lease is something that can make you or break you, because you have to have that lease and you've been putting your address out and people know where you're at, especially if you're a company that people walk into. And so when you're doing those leases, you need to verify, like what's your length. Try to do the shortest term possible, unless you're, redoing the whole inside and you're like, I don't want them to, triple it in 10 years if all the stuff that's inside of it for manufacturing can live for 20. But if you are a service industry that you're, hey, I just need a place to put my computer and things like that, and you can move around, a shorter term. Tenant improvements and can be that on them or on you. And these can be helpful with a realtor, can be helpful to figure out what you can negotiate in that city or that area. So rent and, if your rent's supposed to go up after the 10th year, how much is it? What is it based on? Some people go, oh, it's only $24 a square foot. Well, then the repairs, improvements, and replacements and taxes of what a triple net is can be a lot more, especially if you're saying, oh, in 2 years, they're going to have to redo the roof of the building, and you have 10% of the building, and you're going to be charged 10% of that roof repair. And see if you are able in that area and in that type of building to, sublet it to someone else. What should be avoided? There are many things that you need to look at. There are some things that your, property taxes, building repairs, insurance premiums. If you can avoid putting those in, then you can know that there's a set amount. And it might be better that instead of having, in some companies, having a triple net, that you have a yearly payment at the end of the year or whenever they do that reassessment is just put it into the higher amount for a per square foot. And, it's like, oh, okay, instead of 24, I'm going to pay them 30, but I know that is all, what will happen. And so the, there are things that the landlord's going to try to put on you, and then you need to make sure is it, if you're in a hot market, you're going to do it if you're needing that place. But that's what your realtor will be able to help you with, and figuring out if that's a normal thing and using a realtor that's in that type of building. So, there are commercial realtors that only do high rise skyscrapers. And then there's ones that do manufacturing buildings, and then, leasing buildings for services. So find a realtor that would help you figure out if you have to do these. If not, don't do it. Try not to do any of these that you don't have to. So, how do you capitalize your business? Personal funds is risky if you're, especially if you're close to retirement. I've seen people I've taken $600,000 out of my 401 to open this company, and now I'm ready to, I'm bankrupt. Well, if they would have used that as, somehow to say, hey, I've got this amount of money and get a loan, that bank loan, if done right, might have been able to be filed under bankruptcy, and they still kept their 401. Credit cards, getting in is very similar to, is that it's an unsecured debt versus getting a bank loan that they might have to secure something with, similar to equipment, and then there's crowdsourcing that we've seen where people will have a good idea and say, hey, I need $75,000 to get this started. They make it all pretty, and people start, investing in that. And I don't really think that's an investment. I think it's just that they put the money in. It all depends on how they word them. But I will say that angel investors and venture capitalists are the last things that you're going to be able to do. You're going to have to go through all of these things before you do get the investors involved. What is needed in accounting and bookkeeping? I do recommend making sure that you have a good bookkeeper under a CPA. Bookkeepers are not licensed. They are not registered with anything. If they do something wrong, you're still held liable. If a CPA does it, then their license is on the line. They have insurance. And so they can help you set up a good accounting and bookkeeping system to help you figure out where your money is and what your money is doing. And then also you need to make sure that your books and records are there so that when creditors need to see them, because if you have a bank loan, they're going to say, hey, I need your profit and loss and balance sheet every year. And if your records are done correctly, you just pull that up. This is a quick review of the financial statements, and they all play in together. That there's 5 accounting things, and how they go up is normal, and the opposite is something that goes down. Is that you can see where your sales are coming and what you're spending it on. And that's why the loan companies want to see these. And then also needing financial statements and budgets. These things will help you figure out if you're moving your business plan in the right way. And if you're able to, if you need to pivot. I recommend getting many different professionals. It's a lot cheaper to get those people now when you're starting out than if once you do something wrong. And that, a startup attorney can help you with all the contracts and getting all of those things down pat, your CPA to make sure that you are able to know where you're spending your money, and being able to help, if an audit comes along, or the state sales tax, or any of those things. That's what they're there for. You need an insurance agent and a banker, because if you have a downturn, you can call up your banker and say, that I've been doing this and this is what's changed, but I'm going to we're going to get back on track at this time. Can I get a 30-day loan, or whatever you need to do with that? And other professionals to help you with your marketing and even leasing. These are things that a startup attorney can help you with. And this is how you can get a hold of me, crystalrobinson.com, and it's Crystal Robinson Law on practically everything except Twitter. Did anybody ask for any questions? No. Does anybody have any questions that they want to put in? Oh, yes. The question is, can the domain name be different than the company name? Yes. If the domain name is something that is part of your brand or your marketing, it's a trademark, service mark, you probably need to also file it under the trademarking. Similar to bookings.com was able to trademark bookings.com, and right at the beginning of the COVID pandemic, the Supreme Court actually had a hearing on this, on that case. And it was the trademark saying, no, you can't, do a .com. And they said that, bookings.com, if someone else tries to, put that into a market, will hurt bookings.com, because everyone knows that that's their company. Like Strawberry Strategy and Strawberry Consulting, all under Strawberry LLC. Yes, I mean, as long as your LLC documents that you filed with the state is broad enough. The one time that it does make a difference is if you are a PLLC, meaning if you are a doctor, attorney, CPA, someone that has to be licensed with the state. Their requirements for a PLLC makes it so that it you have to you can't really branch out. So if you wanted to have a law firm and a CPA firm, they both have to be PLLC'd. But with a strategy and consulting firm that doesn't have to be licensed, you can put it all under one thing. The trademark is goods and services. They have classes of 1 through 45, and the higher numbers are services, and the lower ones are goods. Any other questions?
There's one question in the Q&A section,
Oh.
and it asks for advice on when to switch from an LLC to an S Corp. She's been advised not to do it until she's making a gross income of 40K or more, but would like your insights.
If that information is based on a recommendation of a CPA or another attorney, they know your industry and your business better. And I would say that you need to, there's certain timeframes that you have to file with the IRS, or you have to tell them why you didn't do it in that time frame. So if you're an LLC that didn't file with the IRS at the very beginning, you only have so many months, and I can't think of it. I think it's 27, but I could have been putting that together with the 501c3 that you have 27 months after filing to get it approved. So don't take that as a fact, okay? But there are so many months that you have to be able to change entity types with the IRS. There are ways that you can tell them why you didn't do it, and then they can approve it, but it makes more hoops that you have to go through. So if by chance that recommendation was based on your industry and stuff, I would go with the person that knows more information about your company. I recommend usually getting it all done quickly because it's either a sole proprietor or a corporation, S Corp. And if you're an LLC and taking all of, filing all of that kind of stuff, why make the IRS think that you're a sole proprietor? Because then you're only filing with your Schedule C versus a K1, and sole proprietors do get audited a lot more than corporations and even S Corps. Anything else? The other question in the chat is, if a company filed for North Carolina State in 2019 and was inactive until 2021 due to the pandemic, does it still file taxes for 2019 and 2020, even if the EIN was requested in 2021? Well, there's state filings and there is IRS filings. So your state filing, you need to file the lowest type of filing that you need for your company to stay active in the state, because if that goes away, you don't have anything with the IRS anyway, because you have to have that LLC. And so you'll have that, and then based on how your LLC is, you might still need to file for the LLC, but that is a CPA, for the IRS, that's a CPA question based on if you've had any expenses during this time, because even though you might not have been making anything, you might have had expenses that you can write off for on your personal taxes by building the company and having a loss, or you can roll them over for years that that you've actually been making money. if the saving of the name, the North Carolina state only knows that you've filed with them, and they want to know that you're still around. So if you were, they have a saving the name level that you didn't start your company. Well, with them, you've saved your name by filing with them, and they need to know that you're still out there. So within a certain amount of years, they will pull that up and say, oh, this company did not file in 2 years or 3 years. You know, each state is different. And then they will start the process of canceling that company. Yes, I would recommend keeping up the annual report with the state.
Well, we would like to thank Crystal Robinson for being here with us today. This was very informative and wonderful. Thank you so much for your time. Thanks to our partners who helped get the word out about these series of workshops. The resources and materials will be on our website at the North Carolina Bar Foundation. Click on NC LEAP, and we'll have a recording and materials. And you can also look for upcoming webinars and workshops on various business topics. So we'd like to again thank Crystal Robinson for being here.
We have one more question.
We have one more question.
And then, do you need to have applied for an EIN before incurring startup costs to be expensed at the end of the first year of operation? A EIN helps with opening up a bank account, getting employees, things of that nature. The state is the one that shows when you've opened up your company. And so when you opened up your company with the state, you can start having startup costs and stuff like that. Now, based on which type of entity you filed with the IRS with that EIN could mean that that part could be an LLC for a sole proprietor, and then your future stuff could be the LLC for the corporation. But that is something that your CPA will need to look at based on what you are doing with your company. I think that's it.
All righty. Well, thanks again. Thanks for everybody for being here. And you can again go to our North Carolina Bar Foundation website and click on NC LEAP for this and other workshop information. Thank you.
Thank you.